I'm an extension economist with Iowa State University. And today I'd like to talk with you about what we're seeing within the crop markets right now. As we sit here at mid-July, the crop has basically been planted now. We've been watching that development over time. USDA has basically told us that from a national perspective, the crops are looking about normal at this stage of the game, but we do know that we're seeing some extreme weather events in certain areas. Definitely some heat coming on here as we get into July. We've seen drought conditions across a good part of the country, but along with that, we've seen some extreme rainfall events as well. And so that's leading to some questions about crop production as we're looking forward. But we're also seeing what has been incredibly strong crop usage, especially over the last 6 months, that has been helping support the market over time. And so USDA, over the course of the past couple of weeks, has given us several updates, including in this case the June grain stocks report, which basically told us how much of last year's crop we've used up over the first 6 months of 2026. We also got to see the June acreage report, which gave us a fresh update on how farmers have proceeded with planting over the course of this year. And then here in mid-July, they came with the World Supply and Demand Estimates report, which sort of looks at what's happening on a global scale when we're looking at not only the crop and livestock markets, but also figuring out how things are shifting when it comes to the utilization of agricultural products. So with that, let me jump to the slides here and show you sort of where we're at right now. So this is recording this as of July 12th, so a little bit out of after the 4th of July. And when you're looking here at the crop markets, what we saw USDA provide in that update was, like I say, a snapshot of almost everything now when we're looking here. And so the big changes that we saw in the corn market were, if you will, not really changes at all. When we're looking at the estimate, for example, for 2026 acreage, that remained at 95.3 million acres. So it stayed consistent with what we had seen with the March intention. So we didn't see either a pullback in corn acreage because of the higher fertilizer prices this year, but we also didn't see an increase in corn area either. Now, as we looked at the usage of that crop, though, we did see USDA make a few adjustments here. They ended up, as we look at the 2025 crop, adding more usage to the feed side of the equation. You can see that that number is now up to 6.35 billion bushels. Now, they did lower the ethanol number by about 25 million, but you're still talking about very strong 5.55 billion bushels being used for ethanol. And so what that did was that pulled down those ending stocks for the massive 2025 crop down to right at 2 billion bushels. That was a very positive news story for the marketplace here. So we did see those stocks come down for 2025. And when you chain that through what we're seeing for 2026 here, is we're looking at a smaller crop because of the smaller acres. So we're down to about a 16 billion bushel corn crop coming out of the fields this fall. Well, we're looking at usage that's up there over 16 billion bushels as well. And in fact, what USDA did for 2026 was they're expecting to see exports continue to remain strong there. In fact, they added another 50 million bushels to that total there. So overall, what that allows is that those ending stocks for 2026 are now dropping below 1.8 billion bushels. So a good 200 million bushel drop from what we're going to carry out from last year's crop. And that has led to a little bit of price boost here as we've gone in the early to mid July as we're looking here. When we're going to the soybean side, we did see let's call it a somewhat similar tale in that we did not see many changes that really were negative for the marketplace, and we saw some changes that were positive here. Now, again, in terms of the acreage that we saw coming out of here, we did see a little gain in the soybean numbers here. USD added about 700,000 bushels, or 700,000 acres, I'm sorry, to the total here to bring us up to 85.4 million acres. So we are planting more soybeans. We're looking at a larger crop there, but we also continue to see usage look like it's growing as we're going into the 2026 usage year. Now, in this case, where USDA is making the adjustments on the demand side in the gray box there on this slide is that they did pull back I'm sorry, they did add a little bit actually to exports here, bouncing it up to 1.52 billion bushels. So that's still down from the 2024 crop year, but is a little better than we had anticipated going into July. So what that did was that made that small change meant a 10 million bushel decrease as we're looking at ending stocks there. So we're talking about ending stocks basically floating in the same level that they've been for the past couple of years. As you look at 2023 and 2024, we're holding in that 320, 340 million bushel range. And as we're looking here, looking forward, they also made adjustments for the 2026 usage, where we're looking at a little bit higher exports there. They raised that about 30 million bushels there. And a lot of that is based upon expectations of the trade deals that have been agreed to with China. While we haven't seen anything officially in writing yet, there have been some positive signs that China has been active in the market. We saw, especially on the soybean side, many of the sales that were marked up as unknown destinations were finally revealed to be China over time. And so we're expecting to see more sales as we're looking forward for the soybean market. But probably the big area of growth as we're still looking forward for the 2026 season will be in domestic crush. As you see here, that is expected to grow by basically 100 million bushels year over year. And a lot of that is being pushed by renewable diesel development over time. Now, in terms of, the changes we're seeing here, this is to sort of show you how that usage has picked up here, especially as we move through the first 6 months here of the 2026 calendar year. Let's key on the far right-hand side here, that little table out there. What it's looking at is basically, if you will, how many more bushels of corn did we have this year versus last year at these various points in time. The blue bars show you how much corn was basically available at harvest time. So going back to September of last year, we had 18.6 billion bushels of corn available, which was 1.9 billion bushels more than we had the year before. By the time we moved to December 1, we had shrunk that, if you will, surplus down to about 1.2 billion bushels. By March, we had shrunk it down again, down to 870 million bushels. And then by June, we've shrunk it down even more to 650 million bushel surplus. So you can see that we're using corn more quickly than we've done in years past. And that, in the most part here, has been led by exports with a little bit of support on some stronger feed numbers, feed and residual numbers as we're looking forward there. For soybeans, we had been seeing a slowdown in usage, but things have really picked up here, especially April, May, and June of this year. You can see that we actually started the year with fewer soybeans available at harvest last fall, but then we popped into a surplus situation as we moved through December and March. That surplus has shrunk now as we've moved into June, getting down to about 50 million bushels more available in the marketplace right now than there was a year ago. So not much change when it comes to overall soybean supplies. But like I say, we're seeing more positive, let's call it notes, on not only getting soybeans out through the export markets, but like I say, utilizing more of those soybeans here domestically within the U.S. Now, as far as those export sales, like I say, we're not seeing a lot of positive movement here, but it is still moving at its seasonal pace right here, with the expectations that with these deals with China that we should see better sales next year, but not necessarily are we getting back to those record levels. But USDA is signaling that exports this coming year will be better than what we've experienced here for the 2025 crop. On the other hand, as we're looking at corn, we've been on a record tear for the entire marketing year. And as we're looking to finish this up, USDA does expect that to slow down a little bit, but they're still talking about well over 3 billion bushels of export next year. And that's going to be a very strong pull for the corn market, especially with a smaller crop being forecast, at least for this coming fall. Now, when we look at the other areas of crop usage here, what we continue to see is a little bit of growth. Let's call it slow growth when it comes to the livestock feed side and meat production. As you can see here on the meat production side, we're seeing that increase by about a 500,000,000 pounds year over year. Again, still continuing to see a little of that shrink when it comes to the beef market because the cattle herd does continue to get smaller, but we continue to see larger and larger animals coming to the processing plants. On the other hand, as we're looking at pork and poultry, yep, we're still seeing growth that year over year that's helping support that feed demand number. Now, as we look at the biofuel side, as I mentioned, corn ethanol, we did see USDA adjust this down ever so slightly. And that's mainly because when you look at the past few years, what we have seen is a very slow sort of growth trend in the use of corn for ethanol. But as we look at the data, at least through the first half of 2026, that has sort of stabilized, maybe even tailed off just a little bit. Hence, we got USDA's little adjustment there, but we're still talking about very strong corn usage for biofuels. And where we're seeing a lot more interest is on the soybean side, as we have seen a pickup, especially here again. As we move through the first few months of 2026, we have seen an increase, especially in vegetable oil use for, especially in this case, soybean oil use for renewable diesel. And that's expected to continue as we look throughout the rest of 2026 here. And so you've got these engines of basically it's the export side on the corn market and the biofuel side on the soybean market, providing, if you will, the heavy lifting when it comes to crop usage to help provide a little more support into the marketplace. And that support has translated into higher futures prices now. Over the past couple of months, we had seen some weakness come in as the markets were trying to decide just how much was going to get planted this year and would we be able to chew through the big crops we produced last year. So we had seen some downward pressure build up, especially as we move through June into early July. But with these reports coming out, that helped resolve some of that uncertainty and has led to a little bit of a bounce up in prices here over the past week or so. Now, in this case, this was the prices as the close of day on July 10th. And with that, you take an average basis off these futures market prices that are marked in green. That's how you get to those big black numbers on this slide. And that's these big black numbers are the season average price estimates you get from the futures market. And we can compare them to what USDA had on those original tables I had at the front of the presentation here. So USDA was projecting $4.15 a bushel for old crop and 440 for new crop. As we look at futures market right now, it's a little more optimistic again. It's saying 422 as we look old crop and 457 as we look at new crop there. So we are seeing some better prices on the board than what USDA has anticipated here. Again, sort of leaning on this possibility of we are seeing usage that still is remaining strong here. And as we're getting into the growing season now, like I say, I think those concerns about weather events impacting production are starting to build prices back up. A little bit of a weather premium coming back in again. When it comes to the soybean side of the market, again, a little optimism here. USDA was 1040 old crop, 1140 new crop, and as you can see here, the markets are 1048 and 1157. So we're seeing that same sort of pattern for both corn and soybeans here, where the markets are a little more optimistic than USDA is at the current moment. And again, for the same reasons that usage is growing. In this case, it's biofuel, plus concerns about, like I say, here in central Iowa, we've had a lot of water come down over the first couple of weeks of July, where we know other parts of the country have been facing some really hot and dry conditions. So that may be starting to pull down on production as we're looking forward. And like I say, leading to a little bit of a weather premium building back into the market. Well, with that, I'm going to stop sharing now and thank everybody for their time. Again, my name is Chad Hart. I'm an extension economist with Iowa State University.